right, Shaun Parkin, welcome to the WealthTech podcast. I am happy to have you on the pod, given that you're half a world away and literally 12 hours in a different time zone. I appreciate you making the time. Welcome to the podcast.
Thanks, Mark. Appreciate it. Glad to be here.
I wonder if you could just, for the guests, just kind of give a brief overview. You're the creator of the Family Office Sherpa podcast, which is a great educational resource for family office executives, as well as Hall Road Investments. Would you mind giving a brief intro of your roles?
Yeah, of course. So I'm the founder and managing director of Hall Road Investments, which is a boutique consulting firm for single family offices, specializing in investment governance and operations and technology. Like you said, I have the Family Office Sherpa podcast, which was born out of the idea of being a guide, and that was born out of the newsletter. The newsletter that I have has been going for 6.5 years, which is the same name. So we're up to number 161. It goes out every what we call a fortnight or 2 weeks, and the podcast comes out every 2 weeks as well. Yeah, so it's been a really good sort of like you said, it's more educational. It's the podcast itself is no guests, unlike yours, but it's just me for 20 to 30 minutes, just giving a bit of a download of what the family offices out there are looking at and challenged by a lot of the time.
Yeah, I have it a little bit easier. I get to bring on really smart people and just try to get out of the way where you are the content. So congrats. Where did the Family Office Sherpa name come from?
It actually came from a guy in Perth here. I was being introduced on a panel, I think, and it was myself and a gentleman called Peter Shanley from Accordant Global. And Peter is ex-SAS, uh, in the army, very, accomplished military person, and he was introduced as the bodyguard, right? So that person that would potentially help you get helicoptered out of, I don't know, Belize or something
Extractions,
like
that kind of
that.
stuff.
Yeah,
Yeah.
extraction or something. And then I was introduced as the Sherpa. Like Hall Road or myself was the Sherpa. I'm a guide. I'm in that respect. And admittedly at the time I was like, well, it's not quite as cool as being called the bodyguard sort of person, but I really lent into that, which is, the Sherpa, as it sort of intimates, is a guide, is someone there that advocates for clients, in this case, family offices and families. And so I've lent relatively heavily into that, and that's the two businesses. So you've got Hall Road Investments, which I sit within investment committees, predominantly within single family offices, and then you've got the Family Office Sherpa, which is the brand for the newsletter and the podcast.
Well, I love it. I think it's great. One is it kind of catchy, but I think it also kind of talks about, somebody, a guide that shows the way, that has the experience, that has kind of gone through that trail before in that path and has set the ropes. So I think it's outstanding. Obviously, given that your role with Hall Road Investments and around investment governance, that'll be a little bit more of our focus today.
Mhm.
But want to be before we got to dive directly into that subject, I'd love to just talk a little bit broader. You just had a recent podcast and blog post that I thought was really insightful and spot on about some of the common mistakes that family offices make. Would you mind sharing some of the top ones that you've seen?
Yeah, so as you mentioned, it was an episode of the podcast that was actually requested. Like, sometimes I get requests from people around sort of if you could cover sort of the things that we should, potentially look out for, and the title was it's a bit listicle, it's a bit clickbaity, but the whole
Right.
idea
Top
that
10,
there's
right?
10, and I'm sure there'll be another 10 that come up at some point, right? But it was sort of the 10 mistakes that I see single family offices make and how to avoid them or how to fix them, right? So ideally, like I said, it's educational, so we're trying to circumvent a lot of these. I would say that of the 10, the top five tend to be focused around, well, the number one being, and you know this just as well as I do, that family offices have a propensity to use workarounds outside of instead of improvement. Like that tends to be like a challenging piece. which is to say we'll patch this up, we'll kick the can down the road a little bit, and we'll work around it. And that's not good for the family. It's certainly not good for the people that work in the family because it's like, well, I know that there's a potentially better way of doing this, but we continue to patch over it. And I think that's, like I said, the podcast was either to avoid it or to fix it. And I think that's one of the best ones to be able to avoid because once you get that challenge, once you see that something's not working properly, I think looking for solution rather than, and you had Ray, Donizio on previously, and it was, he hates the words, good is the enemy of great,
Yeah.
or great is the enemy of good, sorry. And he doesn't like that term, but it's because you do see so many workarounds in this space, so many people kicking that down the road. The other one is price over value. People really, in for this podcast, I think it's incredibly important because it is around technology, and people look at headline figures or they get a bit of sticker shock and sort of go, well, that seems like a really expensive version of, but we can use Excel or we can use, a really inexpensive version of it and no one's going to question it. But the actual value of something is very hard for a lot of family offices to make that determination. So a lot of the work that I do is around sort of making sure that we do that value prop or that cost versus value add. And particularly on the infrastructure piece, I think it's an incredibly important one. So I'll just go through two more. So the other one that always comes up is keeping things in their heads. Like, and I'm sure you've seen this, I'm sure everyone listening to this has seen the same thing, which is we understand how we're doing things. It's like, okay, well, how does the decision made? How the process made? What's the decision tree look like? What's the process and things like that? Oh no, it's all up here. No, we got it. Don't worry. We've been doing this for a long time. This is how we make decisions. And that often works really well with operating businesses, especially sort of, operating businesses that are run off the back of an individual and make their good decision process. But just being able to articulate it and write it down so that next generation can look at it, so executives can see it. So understanding, and really that's the first time a lot of the time that people have articulated and written down things like purpose, things like investment policy, things like risk expectation, all these sorts of things. So my idea a lot of the time is to try and get people to say, if someone came into this office that had no idea around what was going on, what would they see? And sometimes it's just a whiteboard in the corner, and I don't think that's enough a lot of the time. So I think that's one of the other big ones. And I think the last one I'll cover, and if everyone's interested, there's 10 of them, right? So go to
I'll
the
put a
podcast.
link in the podcast because I thought they were all great and spot on.
Yeah. So the last one, which comes up a lot, and this is that they think that they're the only ones that have gone through these challenges before. As much as everyone thinks they're a unique snowflake, and individually they are, and there's idiosyncratic and things about family offices that are unique, but very rarely in the work that I do are family offices going through something that someone hasn't gone through before. And this could be about the investment policy. It could be about engaging the next generation. It could be about the investments that they're doing or, the challenges they're having with distribution policy, all these sorts of things. Everyone has had a version of that. And one of the things I love doing more than anything is introducing families to other families that I recognize as going, you know what? The challenge that you're talking about here is not necessarily something that you need my help with. It's worth having the conversation with a family that's gone through exactly the same thing. And you can have a really meaningful, important, and valuable conversation with them, which can reduce the stress, reduce the risk, all these sorts of things. You just have to ask the question. So maybe they're my top, what was it, 4 or 5?
Yeah, I think those are great. I do, there is that saying like you've seen one family office, you've seen one family office, but to your point, they're not all unique snowflakes. There are certain commonalities that families
Structurally,
offices.
yeah,
Yeah.
absolutely. Which is where I work, right? So I work in structure and structure. I've seen what good looks like, right? And I think that's what I'm trying to do when I talk to clients, which is we can move towards what good looks like rather than trying to, move around in the dark.
Yeah, there are best practices, right? And there's only so many ways
Absolutely.
you can do a capital call, right? So
Yeah. And
leverage
the
some of the,
technology in particular. Yeah. I mean, technology is a great example because, we live in Australia, right? So there's some platforms that people think will work. And I go, well, it's potentially not going to because of this and this. And the only reason I know that is because I've helped install it or I've talked to a client that has that exact challenge. So these sort of things can really help for sure.
I do see that with with the workarounds in particular, the technical debt, I think they kind of put off and accumulate it. A lot of it's because they are a cost center, so it is a little bit maybe more of a difficult conversation to have when you talk about some
Yeah.
of these capital upgrades to modernize. To Ray's point,
Mhm.
I love his quote there is Rayism. You can't out software bad process, right? So I think that's some of it. Even when they spend the money, they don't get the results
For
that
sure.
they want, and you see it because they're not following these best practices necessarily. So I think those are great. Those are thanks for sharing those, Shaun. Let's be now we kind of dive in on your particular domain. Talk to me a little bit about the difference between governance and portfolio management, just to kind of set that kind of high level framework before we kind of get into the nitty gritty.
Yeah, for sure. I mean, the best way I can describe that is governance, and this is on the investment side. Investment governance is, if you can imagine, and not to kill a metaphor, but the investment governance are the rules of the game, right? They're the rules of the game that we're trying to win to a certain degree. And portfolio management are the players. They're the ones that are, investment management is the implementation. And for one of a better, term, it's playing the game. So you've got rules that are set by the investment governance, investment committee, because investment committee is an investment governance structure, it's not an investment management structure. Then the implementation of that is the way that those rules are articulated, interpreted, and then implemented. And then there's constant, again, not to belabor the metaphor too much, but there's referees or there's umpires or
Yeah.
some version of it, which is, a big part of what I do, which is not I'm not there to question people's advice. That's certainly not my role, and I'm certainly not there to be a bottleneck for family offices seeking to invest the way that they want to invest. It's more we've set the rules of the game. We've set the rules of how we want to implement and manage the portfolio or have the portfolios managed. And now we need to monitor the efficacy of it and blow the whistle if it's not. And that's really a lot of the work that I do. Some version of a critical friend, that person that sits within the investment committee that is independent of the family, independent of the advisor, independent. I have no dog in the fight, as it were, in terms
Yeah.
of transactions or funds under advice or administration. I get paid a retainer, and I'm paid to be an advocate. And maybe it circles back to that whole idea of Sherpa, because that's really what it turns out to be, which is my role is to be the guide and the advocate for the family as we face off against the greater financial services market in the investment team.
That makes sense. I think sometimes family offices can be a little insular. Any group can you end up with that group think you breathe your own gas, and you need that kind of outside perspective to kind of give you a little bit more clarity.
Hmm.
Let's talk about the technology needs for investment oversight. I know family offices can really struggle. I mean, they obviously have a multi-asset class portfolio with even hard assets and operating companies and alternative investments and marketable securities. They can kind of struggle to bring that total portfolio view together. What are
Hmm.
some of the technology capabilities that families need to be able to have clear investment oversight, and where do you see them falling down?
Yeah, so I mean, part of my role apart from is investment policy, like building the investment policy, right, and the implementation of that. But it's very hard to be, from a the cadence that we develop, right? It might be a monthly investment committee or a quarterly investment committee. You need some version of aggregation and then being able to have a top-down view of the portfolio. So I think the biggest thing that I talk to families officers about is how comfortable are we with the accuracy of the data, how easy it is to access. But really a lot of the time it's like, what's the output that we're looking for? And you've got multiple stakeholders there, right? So you've got the investment community. Now I'm a big fan of double clicking on stuff, right? And I can be that person on the investment committee that's like, I'm not a big massive fan of static reporting, which is that I get given it and I don't get an ability to dig deeper into certain things that
Drill
I
down,
see, transactions, things like that. Get an understanding of, okay, I see this, it looks, it doesn't look the same as I would expect it to do. So I need to dig into it as opposed to waiting till the meeting and then asking the investment management team or the investment manager. So, but then other family offices, investment committees are very happy with that. I know a lot of family members are really happy with static. Okay, this is our balance, this is our portfolio, this is what the return has been. Just being comfortable with the fact that the people that have been given the stewardship of the assets are actually performing as expected. So I would say there's different things for different stakeholders. The but ultimately what we're really looking for is accurate and accessible data in terms of what have we got? Do we understand what we have? Do we understand what the portfolio in total looks like? And can we dig into asset classes if needed? And that's, if you think about it from a bell curve perspective, especially in, the families that I work with, we're not looking for portfolio management style reporting. We're not looking at really, well, complex
attribution
reporting.
analysis or something like that,
Yeah,
right?
we're not looking for that. What we're looking for is what we're looking for. And a lot of the time it's, do we know what the bank balance looks like? Do we know what the total P&L looks like? Do we know what our counterparties have done? Do we know what trades have been done to a certain degree? But a lot of people don't really want to get deep in that weeds. And I think that's the difference. There's sort of a bifurcation between, those family offices that have an internal investment team, and those investment team members really want to dig deeper into the analytics because a lot of the time they come from an institutional or a wealth management or an investment banking sort of background, and they want to be comfortable that they've been tasked with managing a portfolio and they need to be able to make sure that they can with the information they need. And then you've got those family offices that really outsource it, and they don't necessarily need to get like an OCIO structure, or they might give a lot of it to their private bank or wealth manager or whatever that looks like. And that's less around sort of digging deep into the weeds of that portfolio. It's more, okay, what do we have? What's happened over this period? What's happened over the year, over the 6 months, or something like that? So it does really is determined by the principals and determined by the family office board and a few others. But my clients range really. It's a broad church, and across all contexts that I have, it's very different. But again, that's kind of the point, right? Which is, people have different expectations for reporting. And unfortunately, a lot of the time, there's no silver bullet that sort of goes, oh, okay, well,
Right.
we'll use that one because that's perfect.
Let's shift gears a little bit, talk about change management. And certainly, change management, I think, with technology is a significant problem for families. I see them where they'll select the right technology or technology that should work, but they don't get the results from it because often that it's the implementation and the basic, change is hard. It's a human thing. But you
Yeah.
had a great blog post on this one as well. The chief of getting stuff done, kind of like a chief implementer. Talk to me about
Mm.
why that role is so important and why change can be so hard for family offices.
Yeah, so that was inspired by some of the families that I work with or have worked with in the past. And the idea is that there's what you probably call a first delegation point, right? And when there's a decision that's made within the office, however that decision comes about, who's going to implement it, or what's the process that we go through? And what I found invariably was there was always one or two people that would be go right. They'll take ownership of it, or they'll being given ownership of it because they knew that it would at least start. Big part of my business at the beginning was to provide consulting services and say, well, this is how you should do it. This is my recommendation. And then it would sort of sit on someone's desk, And you talk to them in a year's two or two's time, and they go, and you go, what happened there? And they go, well, nothing happened. And because, and this is why I changed my business model to be a little bit more of a person that sits within the office as more of a fractional person or investment committee member, because you can kind of move it a lot, right? Especially if the cadence is monthly. But within those offices that don't have that, they have a chief of getting stuff done. And people go, well, that must be the CEO. So no, the strategy is decided on. Now we have to implement it. And a lot of the time, that's a chief operating officer or someone. A lot of the time, I see CFOs in that position, people that have
Yeah, right.
multiple
Chief of staff,
hats,
CFO.
but whoever can see across lines, across silos, I think in particular. And the reason why I like the title is because it kind of implies that it's not there's not a specific title given to someone, but you know them if you will recognize them in your office. And the feedback for a lot of people from that blog and that podcast episode was either that's me, I'm like, okay, that's great, or I know exactly who that is. And the idea is that if they weren't in the office, then nothing would get done. And I think a lot of the time change within offices is difficult because you you have to give the space and time for someone to do it. And a lot of the time it's given to someone that already has a job. You know what I mean? Like there's this element of, oh, okay, well, this project is particularly on the reporting side. This is what I found a lot, which was we're going to give it to the CFO because the CFO owns the data. A lot of the time, if you're using Excel and stuff like that, that's, because there's no fudging cash flow. Investment reporting is kind of fugazi, it's a little pixie dusty, but no, there's no fudging cash flow. Cash is either coming in or it's going out. There's no did it or didn't it. You know what I mean? Like there's compliance and there's government regulation, and there's audit, and there's all this kind of cool stuff. So that's why that person tends to hold the responsibility for the source of truth, right? And so what ended up happening was they're like, oh, here's reporting. And they go, I am the CFO, man. Like I got a lot of stuff I got to deal with. I'm not going to have to deal with this as well. And so really what ends up happening is people's capacity gets filled and all the rest of it. So what I always recommend for family offices is to get that started, is to get the person that starts things, to get a project in place and get allocation of resources. And if you're not going to do that, then externalize it. But the person that makes that decision to externalize it is the chief of getting stuff done because they're the one that goes, you know what, we're not going to do it in-house. We're going to kick the can down the road in 6 months or 12 months' time. We're going to be having the exact conversation that we're having now. And they realize that and they go, I'm going to be able to talk to the principal about this. And to your point before, where they talked about line items, about expenses and stuff, they can articulate it really well. The value proposition of doing this, they know who to talk to in which way. They know how to bring people together. It's a really specific skill set. It really is, and it's hard to do. But it's something that needs to be in the office. And you get very good consultants in the space that do that for people, which is they go, right, I'm going to come in, I'm going to dip in, we're going to get this done. I'm going to allocate resources because I know what good looks like, to that point before. And we're going to get some, and then once it's business as usual, I'll bring someone in, or we'll hire for it, or we'll have some permanence here. And I think that tends to be the way that I've seen it work well.
Yeah, I think it's a great role. I think family offices can certainly benefit from bringing in outside help and technology consultants, but there still needs to be that buy-in, that person that's internally that's going to be accountable for it and can make
Yeah, and we've
that.
all seen it, right? So if you work with like Big Four or a partnership-led kind of firm, the difference when you get a partner that advocates for something, and drives it through because they know how to navigate the complexity is very different to someone that can't. You know what I mean? Like you have to be a good navigator, but you have to, there's all these things. And it's always fun to find that person, especially like myself I'm external to the office, right? And when you recognize them and you go, well, that's the person that I need to articulate what I reckon we should do to them because that's going to get it done.
Yeah, and it's normally that person's busy, right? You want to get something done, give it to somebody that's busy. I think the other thing that you see with family offices and just firms in general when it comes to technology change, it's always going to take a little bit longer than you thought. It's always going to be more expensive than you thought. You need to
Yeah.
build buffers into the
Twice as
um,
long is the way that I generally say.
twice
Whatever
as
we
long,
think it's
twice as
going to take, it's
expensive,
going
right?
to take twice as long. Yeah.
Right. Even on conservative estimates, it ends up
It always
being
ends up being about twice as long as we expect.
in
Yeah.
the case. But and to try to find those early wins, I think can be important too to get everybody on
Oh,
board.
look, and managing expectations, there's most of the way that when I did the tech consulting piece, it was always like there's this first bit, which I'm going to be super annoying because I'm going to be asking a lot of like for a lot of data and all that sort of stuff, or the people we bring in is going to. And there's going to be this really messy bit in the middle where, to be honest, most people are going to go, what are we paying for here? Like this doesn't look better. This doesn't
Yeah.
look like an improved system. And then there's going to be this point where everyone goes, oh, okay. And that's the fun bit. But there's this messy bit in the middle where everyone, and this is probably where some people throw it out or just throw their hands up and go, this is terrible. I can't believe we're paying this much money or we put this much time into it. But I'm like, no, there's a process here. We're trying to, this, right? It's about reconciliation of the data set. It's about replacing reportage that they're really comfortable with new reporting, which looks slightly different, but you still have, and this is why it's so important to have someone, a champion internally, or someone like a, chief of getting stuff done, because they're like, no, I recognize which part of of the process we're in, which is this messy middle bit, but it's going to get better. It's going to be really, really good to get through this.
Yeah, technology is it's a messy business and you
Mm.
kind of have to go through that messy middle
And no
stage.
one
And
likes change, Mark, right? No one likes, I like it this way. I like my Excel dashboard,
I
or I
like the way
liked,
we always did it, right? We always
yes.
did it this way. That is the harbinger of, yeah, you need the change.
Yeah.
But then you'll get through the other side and they couldn't imagine going back. That's when you end up in a good state.
Oh,
So
absolutely. Yeah. And I think one of the great things about natural language versions of it means that we can get those people that would not normally be engaged with the process engaged. Like you can see the way that they're interrogating it, just what's my 1 year return on this asset, and you start to see them train it a little bit. You know what I mean? And it's starting to the point where it's almost like monthly, it's going to start pinging out really, really good information for them that they are easily accessible, and you just see them light up. And that's what I love about operations. Investments are great, but it takes, 3, 5, or 7 years to figure out if you've made the right decision or not. But operations and technology, like sometimes that can be instantaneous. That can be really a sharp relief between, what was and what is. So that's why I like it.
yeah, especially with the technology today, as you point with AI and large language models, ability to have like a conversation with your data. I mean, you
Yeah.
don't some in some ways you're not going to necessarily know how to use the system or how to write that report, but you know what information you want. And
Mm,
if you could, articulate that in natural language, it's extremely powerful. I think
mm,
I often wonder what will make family offices modernize. And I'm speaking in general terms. There are some very progressive modern family offices out there, but certainly due to the nature of being cost centers too, that there tends to be, the bell curve tends to be a little bit more towards the laggards. And I just
mm.
think some of the technology out there, especially if they're on legacy systems or not on systems, but Excel based, it's the opportunity to reduce your risk and to be able to enhance your overall, posture. It's too great now with AI.
Oh, and engagement in the next generation is just a massive thing, right? Because it's very hard to engage with something you can't see or an Excel spreadsheet, even if it is a really nice pivot table. There is I mean, a big part of it is being able to customize reportage to people and to talk to them and understand what they're looking for and customize it to them, even using the same data sets, right? Or have them articulate it themselves, which is even better. But that's I think the next generation in particular needs it on their phone. You know what I mean? We're
Yeah.
not sending spreadsheets here. Like the engagement of like if I think about my kids, right? My son's 13. And in 5 years' time, potentially, he would be a steward within the family office if this was a family office, right? And you go, how are you going to see this data? And he'll go, well, it's got to be on my phone because this is the only thing that I carry with me. This is the only way I interact with stuff. And if it's not, they're like, well, then I'm out. You know
It
what I mean?
doesn't
Like
exist.
I'm not
Right.
part of it. So
Right.
if you're not, and look around the room when you have family board meetings and stuff like that, and you look at the back of the room, and if they're just on their phone and they're not engaged with it, you have to, you have to think about that. So I think from a next gen kind of point of view, it's no longer like a good to have, it's a must have for sure.
They want it when they want it, and they want it on their device of choice, and their device of choice is their phone, for sure. Absolutely.
Absolutely. Yeah.
Um,
Otherwise, they're just not going to look at it.
it doesn't exist. Tell me about some of the regional differences in family offices in Australia and in the Asian market compared to the US. What if, for somebody from the US, what I might not realize about the differences in those markets?
Oh, look, I think if anything, if you're from the US, you'd be probably surprised at how similar we are, honestly. In particular around investments. We manage a significant amount of assets that are US based and US dollar denominated. For an American, it's kind of interesting to sort of talk about the fact that there is other currency out there apart from the US dollar is always one of those things. So I'd say the biggest difference is our hedging of currency. Like the fact that we spend in Aussie dollar or whatever that ends up being, but a lot of our investments in US dollar, in particular for the more sophisticated family offices, we have a significant amount of offshore investments, and we need to repatriate that. So currency is probably the biggest difference. And if you speak to any American asset manager or someone like that that comes to Australia, the fact that there's a currency management piece that's a very at the front of it is probably the biggest difference. So hedging that currency, managing that risk. Like anyone, there's a lot of home bias here. A lot of direct property. I think the big difference potentially is that, yeah, I mean, we're very global oriented. Australia and New Zealand, Asia Pacific. So if you're in Singapore and Hong Kong, Auckland or Sydney or Melbourne or Perth, like me, you are going to be very global because you realize that, there's not every asset class can be satisfied if you're looking for the
Yeah.
best locally.
In the US, you can just be US focused, right? You
Yeah,
can't.
and look, yeah, I sit on an US based investment committee, and a lot of that is, there's not a lot, there's that exceptionalism piece, but there's good reason for that. There's very deep capital markets. There's a lot of opportunity there. I think if anything, at the moment, we're kind of looking at, you know, non-US investments a little bit more potentially than usual and and again that brings in euro dollar exposure or different asset classes a little bit. I mean private markets in particular I think are really they don't have that depth that they do in the States, but yeah, we're starting to see a little bit more diversification across geographies. But yeah, I think the thing that most people are surprised by, and this is why, to be honest, I do talk to a lot of US, my listeners, the listeners of my podcast is predominantly US, so maybe that gives you an idea of
Okay.
what that, there's not geographically specific. I think everyone kind of has
Yeah.
the same challenges. We have family dynamic challenges. We have, intergenerational transfer. We have pacing and sequencing and risk and all these sorts of things that are all the same. I think there's no real. This is what I love about family offices, right? They are
Yeah.
unique to the family, not necessarily unique to the geography. And I say that because I don't work in tax and legal, right? If you spoke to someone that works in tax and legal, that's a very
Right.
different question.
Right.
But from an investment point of view and from a family dynamics point of view, it's not a lot of difference. It's very similar.
That's great. So taking a look, I mean, there's been so much change that's going on, and I think the one thing you can say is that pace of change is probably going to continue. But
Mm.
What does the future hold for the family office market? When you look out, what do you see?
I see I see an increase in, I'm not sure if it's the right term, but that professionalization, right? In the fact, when I first started Hall Road, you kind of, family office was a term well used, but you kind of had to explain it a little bit. But you don't have to anymore. If anything, people use family office as a marketing term for
Oh,
for
used
their
and abused.
offering.
Yeah.
Yeah, and it's probably gone all the way to the other side now, which is, oh, well, we're family office, and look, I'm no gatekeeper here, but the nomenclature is probably been taken over a little bit. But I would say the biggest trend is going to be, and this is the conversation I have almost daily, which is I'm going to look at family office as a really viable career move now. And they're not necessarily people at the end of their career or looking to sort of have a relatively, not cruisy, but certainly not as impactful or whatever they might be when they were 20 or 30 or something like that. We're starting to see people move into this space and go, well, this is a real career opportunity. Like this is a career that I would like. And it makes a lot of sense, right? You get coalface, like you get coalface experience with multiple assets. You get really interesting, idiosyncratic kind of investments that you're going to have to be on the fly with. You have to deal with personalities a little bit more, and I think that's the challenge for a lot of people that maybe deal more with committee-based kind of investments. But yeah, the increase of people looking at it and going, you know what? I'm not going to wealth management. I'm not going to get an asset management. I'm going to go in, or asset owners. I'm going to go into the family office space. And I think that's predominantly what we're seeing. For firms like Hall Road, there never really was that big. There is a bit of a more of a movement toward to go, well, we need someone independent in the office, independent of the family, independent of the suppliers, just to have that governance. And it kind of sounds a little bit boring to a lot of them, which is like, oh, really? Do we need someone that sort of, are they going to be a handbrake? Are they going to be that person that says no? It's like, well, not a good version of it. A good version is, no, I understand that this is what you do. You might want to put 80% in one asset class, and it's your money. You do with it as you want. But it's more around sort of what are the rules, again, going back to that investment committee kind of conversation at the beginning, which is what are the rules of the game that we're trying to play by. And that's a lot of the work that I do. I think there's a move in the wealth management side as well. I think there's this in-source outsource conversation that's happening, and I'm not sure if you're finding that as well, which is, what do we want to do ourselves and what do we want to get other people to do for us? And now that firms are recognizing family offices as a commercially viable client base, all of a sudden, um, we are starting to see some options sort of come up. Do we want to use OCIO? Do we want to use operations and technologies in outsource? This terminology around what is a multifamily office? This white space of it. We're not a private bank. We're not a classic sort of mass market wealth manager. We want to take on 10 to 15 clients of certain size, and we can customize, that corporate multi-family office structure. I think we're starting to see a little bit of that, which is great, because I think that's the missing part for a lot of the RFPs that I put out for wealth managers, as we try to implement the investment policy. Like, I'm trying to find that group that might be a little bit more looking to build a single family office structure, but an outsourced version of it, and I think that's kind of cool. And that lends into the technology piece. Are they going to do a lot of the heavy lifting on that side? So that operations and tech outsourcing piece, I think that's really interesting, and almost to the point where you go, what do we want to do? We
Right.
want to do the philanthropic piece, and we want to do direct real estate, and everything else we're outsourcing. And they go, okay, well, we can do that, right? And we can curate it. We can be a little bit thoughtful around it. So maybe that's the trend. The trend is we can have that in-source outsource conversation a little bit, with a little bit more thoughtfulness around the curation, because they're starting to get some suppliers there that are, and if we can have our home base managed by, you know again, thoughtful, process-driven people that aren't trying to rip the fun out of it, all the better.
Yeah, I think those are all really great points. I think in the States in particular, you're seeing that the multifamily office, the commercial
Mm,
multifamily office is really a kind of a winning business model. You're seeing firms wanting to offer more family office services, and that level of service is coming down to a lower tier. What's used to be just kind of the 500 million, a billion is now,
mm.
being offered through multifamily offices
Well,
of
maybe
people.
that's the trend, right, Mark? Which is that that barrier to entry for people to build an office is getting lower. And but then it goes back to the whole point is like, why do you want to have one? You know what I mean? And if you're fully outsourced, is it a family office or is it just a portfolio that you're outsourcing? And to be
Well,
honest, I don't care. You can call it whatever you want. I can call a $100,000 portfolio a family office if you want to, but you got to have purpose. You got to have some idea around what the expected outcome and returns are going to be, and go nuts.
what's your core competency? What do you want to focus on? And then, try
Yeah.
to find thoughtful folks that outsource to. I think on that MFO side too, you see them not only servicing individuals, but family offices, which can be really attractive. I mean, family offices need to offer a wide range of complex services, and even a large family office is a small business, right? 50 people would be a large family office, and you look at the portfolio of things that they have to manage and provide to that family, you can't do it without outsourcing. So I think it's a really great point that outsourcing is important. I think the other thing that you see with outsourcing too is that there's like a continuum along most of these services, with technology that can be from, hey, we're going to do it all, and you just log in and you get it done, to, hey, we're just going to do the data management and reconciliation for you, and then you take care of the rest. So family
Mm.
offices have really fine-grained capabilities about where they want to outsource, how much they want to outsource to,
Yeah.
which I think
And
is
that's a big part of my role, to be perfectly honest with you, which is to try and figure out what we do ourselves and what can we get someone else to do the heavy lifting on, to be honest.
but I think there's a whole nother podcast here, Sean, to be honest. Um, so I like to end these podcasts on a personal note with,
Sure.
three questions that have nothing to do with family office or wealth tech.
All
You're
right, fire
based in
away.
Perth in Western Australia. What is something that people might not know about Perth? And if you're visiting Perth, what's the must see? What's the must visit?
Okay, so the thing about Perth is we are the most isolated capital city in the world. But there's a small island off the coast of Perth called Rottnest, which was discovered by the Dutch. And the reason why it's called Rottnest is because there's a small marsupial called a quokka that is only found there and in a small patch on the south coast, but they're everywhere. So if you ever go there, you're not like you're going to a place where you might not find them. They are literally everywhere. And if you Google quokka, it'll be the happiest animal in the world or something. Everyone goes there for selfies and stuff. It's the cutest thing in the world. But you got to go to Rottnest. You got to see the quokkas. You got to snorkel. You got to go for a surf, stuff like that. The other thing that a lot of people really love about Western Australia in particular is it is massive, and we have good surfing, good wine, good beer, good beaches. So not a
You've
bad
had
place.
I love it. I've had a chance to do some backpacking in Australia after college. It's really a beautiful country. It is a diverse, huge country. It's as big as the continental US. Is it bigger?
Oh,
I think it's
you got me on the
close.
spot there. I think it's big. It's and
Yeah,
Western
I think it's
Australia
like that
itself
size.
is
Yeah.
yeah, Western Australia is three times the size of Texas, I believe, but it's got very little people. It's got 2.5 million people in it. So it's a lot of people on the coast and a lot of nothing in the middle. It's beautiful.
Um, you've had a chance to live in a few different areas of the
Yeah.
globe. What's the most unique place that you lived in?
Probably out of Mongolia. So Mongolia as the country. So I lived there for 6 months in 2003. So for while I was a stockbroker in Sydney, and then I was moving to London, and I managed to snaggle a contract working for a mining services company in the South Gobi Desert, about 80 k's north of the Chinese border, called Oyu Tolgoi, which is Turquoise Hill, which is a very big mine site now. But this was '03, middle of winter, minus 40 degrees Celsius. At one point, my eyelids froze shut, which was a little bit disconcerting. But yeah, one of the stranger, more beautiful, interesting countries that I've lived in. Winter in Mongolia. It's
There you
It's an
go.
experience for sure.
Um, and just to finally wrap it up, what's one skill or hobby that you have that people might not know about?
Yes, I was challenged by this one. I don't really, I mean, the only thing that hobby that people are surprised about for me is that I really, really enjoy gardening. Like, love gardening. Like, my lawn is pristine. And I live in a very, very hot, dry
Yeah,
climate, and we have very heavy water restrictions in summer. And it's a challenge, but it's one that I enjoy. Trying to get things to grow and not die in summer in Perth is one of my, you know, when I can get through the summer, I'm a very happy person.
there you go. All right, Sean. Well, this has been fantastic. I
Thank you,
really
Mark.
appreciate you coming on the show.
Pleasure.
Thank you for sharing.
It's been wonderful. Thanks for having me.